Guys, I'm not here to talk to you about a market correction. I'm here to autopsy a crime scene. A crime scene which will be fully exposed to the American public on March 31st. I'm talking about financial crime that's been running in the background for 54 years, silently skimming trillions of dollars from Main Street to Wall Street. It will go down as the single great economic scandal in history, making Bernie Madoff look like a small-time crook. Talking about the rigging of gold. For decades you were gaslit. They told you gold was a pet rock. They told you that dollar was king. They lied. I'm sharing this message because the paper gold market, a 50-year illusion designed to hide the fact that the Fed is bankrupt, is finally shattered. On September 14th, 2023, the illusion broke. You probably didn't see it on the news. They didn't want you to see it. But in the deep plumbing of the London and Shanghai exchanges, a hidden circuit breaker tripped that hasn't moved in 54 years. The plumbing couldn't take the pressure. The pipe burst. For decades, the price difference between London and Shanghai was measured typically within a few dollars, but on September 14th, that spread didn't just widen, it's exploded to $120 an ounce. That's a 20-fold jump in a matter of seconds. It isn't a glitch. It's the spine of the global financial system snapping in half. Now, I want to be clear. The London gold market did not go into an emergency close, but it was close. The last time we saw a stress signal like this was December 2008, when gold futures went into backwardation for the first time in modern history. The paper market was cracking. Gold was at $750. A company called Detour Gold was sitting on 14.9 million ounces of undeveloped gold in Ontario. They hadn't poured a single bar. But when that stress signal fired, Detour ran from $350 to $39.40 by September 2011. That's over 1,000% without mining an ounce. The market repriced the deposit for them. On September 14, 2023, that explosion was bigger than 2008. That wasn't a hairline crack. That was the foundation giving way. Since that circuit breaker fired on September 14, 2023, gold's made more than 95 all-time highs. I believe a historic repricing event has begun, unlike we've ever seen in the history of the gold markets. My analysis suggests we could see trillions of dollars in wealth transferred over the coming months as the gap between paper promises and physical reality closes. The total above-ground gold supply is approximately 212,000 tons, or roughly 6.8 billion ounces. Every $1,000 increase in the gold price represents 6.8 trillion repricing of global gold holdings. If gold goes from 4 to 6K, a move well within historical precedent given current conditions, that's a $13.6 trillion repricing event. That's enough money to buy every share of Apple, Amazon, and Microsoft combined, and still have $2 trillion left over to build a second Pentagon. Because of a 90-year-old law, a law most people don't even know exists, quietly keeping a critical segment of our economy functioning, this repricing will be forced to begin on March 31st. This wealth transfer will be bigger than the dot-com boom, bigger than the housing bubble, bigger than the AI revolution. It's the reason the Financial Times recently reported that gold has broken its historical correlation with the economy. And if you're watching this, you're probably asking one question: how? How do you grab your share of this epic surge of wealth to protect your family and build a dynasty? How do you position yourself before the repricing event hits the headlines on March 31st? Over the next few minutes, I'm going to give you the definitive answer. I'm going to show you the 3 specific signs that the cartel has lost control. And most importantly, I'm going to reveal the details of one specific stock, a company I call the shadow miner, that is a primary beneficiary of this collapse. It's a stock I believe could soar 1,000% in the coming 12 months as the major mining companies scramble to buy it out. Who is Sam Putnam? Now, if you don't know me, my name is Sam Putnam. I've spent the last 10 years in the trenches of technology, but I didn't start there with an engineering degree. I grew up going to public schools. I started at the bottom. I didn't go to the feeder schools like Harvard or Wharton that churn out the guys who rigged the system. I had to fight for every inch I got, but I had an edge. I was mentored by Adam Geffert, the legendary day trader and former hedge fund analyst, who famously is ranked number 3 in the world on the popular web investing site Kinfo. He taught me that the consensus is almost always wrong. He taught me that when the crowd is running one way, the opportunity is usually in the other direction. Because of that training, I became one of the sharpest analysts on YouTube. In 2014, I launched my own artificial intelligence consultancy, consulting not just employees at big banks, but by my own pedigree, other engineers who trusted me to give them hints of what the future would bring. And that independence is why I've been able to make controversial calls that the mainstream media tried to bury. I warned my mailing list about the growth of natural language processing a full half-decade before OpenAI was launched. But I didn't just predict the $500 billion startup. In 2018, I predicted the rise of TikTok, growing hundreds of thousands of followers in 1 month, just to show how powerful the platform was. I decided to share my gift at making predictions with my investing audience here on YouTube, leading to legendary gains like 204% on Bloom Energy, 105% on Astera Labs, and 103% on Nebius. I called the beginning of the September bull market almost to the day, telling my viewers to buy quantum computing stocks like D-Wave and rare earth stocks like the United States Antimony when the rest of the world was still shocked from the early 2025 tariff crash, locking in gains as high as 330%. But recently, I've been focused almost entirely on the resources sector. And honestly, while most investors were losing money or treading water in the choppy markets of October 2025 through January 2026, we managed to find some incredible bright spots. I'm talking about gains of 52% on the nuclear energy company Oklo, 66% on Barrick Mining Corp, and 38% on the Spider Gold Trust, all closed out in just the last few months. And looking at our recent portfolio right now, we have an open position in the Global X Silver Miners ETF I recommended in December 2025 that already went up 42%. I'm not telling you this to brag. I'm telling this because I want you to trust the math I'm about to show you next. Now, these are some of my most extraordinary plays, but I've had over half a decade to refine my investing alone. Since I started publishing my research 8 months ago, we've achieved over a dozen 50% or greater trade recommendations. And over those 8 months, we've delivered a phenomenal batting average across both winners and losers. The charts don't lie. Those excellent returns have come during regular bull markets and choppy markets like the last few months, during China tensions and AI bubble concerns. But none of that compares to the historic opportunity I see coming right now. Those wins were just the warm-up. We're staring at a 1,000% window. Now, I realize that might sound crazy, but once you see all the evidence, I think you'll understand why I consider this one of the most pivotal moments in the US economy. Specifically, why a 90-year-old law will trigger the most epic financial shakeup since the Great Depression, starting March 31st. So, what exactly is happening right now in the markets that makes this moment different from the last 50 years? Why will it be unlike anything we've ever seen before? It comes down to first understanding the moment the illusion truly cracked, September 14th, 2023. On that day, the plumbing of the global financial system burst. The price of gold in Shanghai disconnected from the price in London. The spread blew out to $120 an ounce. That shouldn't happen. It's essentially free money. Traders saw it. Algorithms saw it. They all tried to buy gold in London to sell it in Shanghai for a risk-free profit, but they hit a brick wall. Why? Because the London vaults were empty. The screen said, gold for sale, $2,600, but when they went to the window to get the bars, the window was closed. It was a failure to deliver. That was the moment the music stopped. The Western central banks are out of ammo. They're naked, and the market knows it. And when the market realizes the emperor has no clothes, what happens to the price? It doesn't just go up, it teleports. We already saw the beginnings of this as gold more than doubled from that circuit breaker moment. Almost to the day by 2025. It hasn't stopped running. Here's why. Imagine going to your bank to withdraw your life savings to buy a house. You put your card in the ATM or you walk up to the teller and the teller hands you a slip of paper that says, I'm sorry, we don't have the cash, but here's an IOU. We're good for it. That is what is happening in the gold market right now. And when that panic fully hits Main Street, when people realize their ETF isn't actually backed by metal, the rush into real assets will be unlike anything we have ever seen in 300 years, starting on March 31st. I'll explain in a moment, but to make my point right now, I want to draw your attention to something significant in the biggest gold ETF in the world. Right in the fine print, retail shareholders cannot redeem their shares for physical gold. The prospectus makes clear that only authorized participants, major financial institutions, can create or redeem shares, and only in large baskets of 100,000 shares or more. For the average investor, if the system breaks, you don't own gold. You own a tracking instrument. You own a claim on a trust that may face its own liquidity crisis. Real wealth isn't a promise, it's possession. And that's why we're moving to the shadow miner. I believe there is one specific stock, a company I call the shadow miner, that is positioned to capture the bulk of this wealth transfer. This isn't a hunch, it's math. This company holds the rights to more gold, copper, and silver than almost any other company on earth. They're sitting on a deposit so large it's nicknamed the King's Vault. And yet, because of the cartel's suppression, because the price of gold has been held down for so long, the stock is currently trading for pennies on the dollar. It's the single most undervalued asset I've seen in my decade-long career, and I believe it's the key to our goal of 1,000% gains over the next 12 months. My target's 1,000% gains. That would turn a $10,000 investment into $100,000. And frankly, based on historical precedents, that might be conservative if gold hits $5,000. Now, I have to be clear, this is a target, not a guarantee. Past performance of similar setups doesn't guarantee future results, but the math and the precedents are compelling. I want to drill down into this shadow miner in a moment. I prepared a full breakdown of their assets, but first, let me address the elephant in the room. There are a lot of gold bugs out there who have been crying wolf for 20 years. I'm not a gold bug. I'm a capitalist. I go where the money is. In August, I told people to buy quantum stocks when everyone hated them. In September, I told people to buy rare earth stocks before everybody rushed to buy them. I only buy gold when the data tells me the system is breaking. So why now? Why has the suppression created a bigger opportunity? Think of a beach ball. The cartel's been holding this beach ball underwater for 50 years. The harder they push it down, the more pressure builds up. In 2026, their arms are getting tired, the muscles are failing, and when they let go, and the data says they're letting go right now, that ball isn't going to gently float to the surface, it's going to rocket into the stratosphere. Now, I use the word cartel. Some people might think that sounds like a conspiracy theory. It's not a conspiracy theory, it's a business model, and it's documented. How documented? Well, in 2023, a federal judge in Chicago sentenced JP Morgan's head gold trader to 2 years in federal prison. The charge? Fraud and manipulation of gold prices. His boss, the man who ran JP Morgan's entire global gold desk, went to prison too. 10 traders across 5 major Wall Street banks were convicted. I'm talking about JP Morgan, Bank of America, Merrill Lynch, Deutsche Bank, the Bank of Nova Scotia, and Morgan Stanley. JP Morgan alone paid $920 million in fines. A colleague testified under oath, quote, "This was an open strategy on the desk, it wasn't hidden." That is not a conspiracy theory. That is a federal conviction. Is the entire elite in on this? No, but those convictions were real. To understand how deep it goes, you have to go back to the scene of the crime. Go back to August 15, 1971, a Sunday night. Richard Nixon interrupts Bonanza. He looks into the camera and says he is temporarily suspending the convertibility of the dollar into gold. He lied. It wasn't temporary. It was a coup. It was the moment the government stole the money supply from the people. Was this a crime? I'm not saying that. I'm just saying that before that moment, a dollar was a claim check on a fixed amount of gold. The government couldn't just print more money to pay for wars or welfare because they didn't have the gold to back it. But after 1971, the restraint was gone. They could print as much as they wanted, and they did. But they had a problem. If they printed too much, the price of gold would skyrocket, and people would realize the dollar was losing value. Gold is the smoke alarm of the financial system, so they needed a way to disable the smoke alarm. They created the futures market. They created paper gold. This allowed them to sell unlimited amounts of fake gold into the market to smash the price down whenever it started to rise. It was a leash designed to keep gold under control and keep the American people asleep. For 54 years, that leash held. You can look at the price of gold for the last decade alone and see it went sideways. But on September 14th, the dog got too big, the leash snapped. For 45 years, no year came close to matching the 1979 gold rush. When Soviet tanks rolled into Afghanistan, American hostages were in Iran, and inflation hit 13%. That year, gold set 54 all-time highs, a record that stood for nearly half a century. Then in 2024, 38 new highs. 2025, 50 more. January 26, 10 more in a single month. Nearly 100 all-time highs in just over 2 years. More than the 1979-1980 gold rush and the 2011 Eurozone crisis combined, with room to spare. You don't get a move like this explosive unless something was holding the price down for a very, very long time. If that sounds like manipulation, you're catching on, but here's where it gets criminal. The second engine of this fraud is what they call the leasing program. Now, on the surface, leasing sounds sophisticated, but it isn't. It's a shell game. Think of it like a valet parking lot. You drive up in your Ferrari, hand the keys to the valet, he gives you a ticket. You think your car is safe in the garage, but the second you walk inside, that valet is renting your car to an Uber driver to make extra cash. The Uber driver thinks it's his car. You think it's your car. The restaurant lists it as an asset. 3 people, 1 car. It works great until everyone tries to leave the party at the exact same time. That's September 14th. China, Russia, and the BRICS nations all walked out of the restaurant. They handed over their tickets, and the lot was empty. That is the default. That is the moment the paper gold scam died. It is a functional default. The lease rate chart proves it. Normally, lease rates are almost zero, but there is a massive spike recently on this chart. Banks are paying exorbitant rates just to borrow gold for a few days to cover their deliveries. They are scrambling. And when the physical shortage becomes acute, the price mechanism breaks. The only way to restore equilibrium is for the price to rise high enough to force holders to sell. So what price is that? What price balances the market? That is the trillion-dollar question. If you look at the ratio of paper money to gold in the 1970s, gold had to go to $850 to balance the books. If you look at the same ratio today, if you look at the M2 money supply, the US debt, global derivatives exposure, to balance the books today, gold doesn't need to go to $3,000, it needs to go to $15,000. The US claims to hold 260 million ounces of gold at Fort Knox. The fact that there is no documented evidence of missing gold does not guarantee the gold is all there. The national debt is $36 trillion. If you had to back even 50% of that debt with gold, you'd need gold at $69,000 an ounce. At $15,000, gold would cover roughly 10% of the debt, which is where we were historically before Nixon closed the gold window. $15,000 an ounce sounds like hyperbole, but it's just a return to a historical norm. Look at the debt clock. We're adding $1 trillion in debt every 100 days. We're paying $1.1 trillion a year in interest. The government has 2 choices. Default on the debt or inflate it away. They will never default. It would destroy the banking system instantly. So they must inflate. They must print. And when they print, the denominator, the dollar, loses value relative to the numerator, gold. A $15,000 gold price isn't about gold becoming more valuable. A loaf of bread is still a loaf of bread. It's about the dollar becoming worth less. It's about the dollar returning to its intrinsic value, which is 0. And the cartel knows this. That is why they are suppressing the price. They're trying to buy time. And if we want to return to the gold standard, this is a problem. They're trying to keep the illusion alive long enough to transition their assets out the system. But the clock ran out on September 14th, 2023, and gold's been raging higher since as more people wake up. It's why gold has more than doubled since that circuit breaker moment. The vaults hit critical levels. The physical float is gone. We're now running on fumes. And when the engine stops, the price explodes. Think this is theoretical? That it could never really happen here? It's already happened 3 times. And there's a pattern. March 1968, 8 central banks had been secretly selling gold to hold the price at $35. Demand overwhelmed them. In 1 week, they bled nearly 1,000 tons. They ran out of metal. The US asked Britain to shut down the London gold market. Queen Elizabeth declared a bank holiday. The market stayed closed for 2 weeks. That was a total failure to deliver. The central banks literally ran out of gold to sell. Result? Nixon closed the gold window 3 years later. Gold went from $35 to $850, a 2,000% gain. But here's what most people don't know. The miners did even better. Home stake mining, the bluest of blue chip gold stocks, ran from $5 to $66, a 1,000% gain. And the juniors, a small explorer called Copper Lake, went from 8 cents to $10.50. That's 13,000%. A $10,000 stake turned into $1.3 million. The people who saw the delivery failure coming and positioned in miners before the crisis went public, they became generationally wealthy. March 1980, the Hunt brothers had accumulated a third of the world's tradable silver. COMEX couldn't deliver, so they changed the rules mid-game. On January 21st, they went to liquidation only. You could sell, but you couldn't buy. That was an explicit admission. The exchange couldn't deliver the metal. On March 27, Silver Thursday, silver crashed 50% in a single day. The longs got wiped out, the shorts got bailed out, the Hunts defaulted on a $100 million margin call. But look at what happened to the mining stocks in the months leading up to that crash. Silverado mines ran from 26 cents to $10.63, 4,000%. Eagle River mines, 3,000. Wharf Resources, 2,000%. The average junior miner in that cycle returned 2,300%. The Hunts got destroyed because they're holding paper. The people holding mining shares, they cashed out at the top and watched the carnage from the sidelines. March 2020, COVID shut down the Swiss refineries that produce COMEX deliverable bars. The spread between paper and physical gold exploded to $70 an ounce. The LBMA stopped delivering. The CME had to rush out an entirely new contract, the gold-enhanced delivery, just to keep the system from imploding. Industry officials went out of their way to avoid calling a default, but COMEX deliveries that year exceeded the entire 5-year total from 2015 to 2019. The system survived only because they changed the rules. And what happened to gold stocks after March 2020? The Van Eck Gold Miners ETF doubled in 4 months. But the juniors? Karora Resources ran 840%, Calibra Mining 600%, K92 Mining 500% in less than a year. The people who recognized the delivery crisis and bought miners in March 2020 didn't just beat inflation, they changed their financial lives. Notice the pattern. It's always March, the delivery crunch, the rule changes, the forced liquidations. And every single time, the people holding paper got crushed while the people holding mining shares made fortunes. Now look at the calendar. The next major delivery month is April 2026. First, notice day. The day paper holders can demand physical bars is March 31st. And this brings us to the first sign. Before I show you the evidence, let me explain exactly how this works and why March 31st isn't just a date on the calendar, it's a legal deadline. And it's backed by federal law. In 1936, Congress passed the Commodity Exchange Act. It's codified at Title VII of the United States Code, Chapter 1. That law created the regulatory framework for every futures contract traded in America, including gold. In 1974, Congress created the Commodity Futures Trading Commission, the CFTC, to enforce it. The CFTC's regulations are published in Title 17 of the Code of Federal Regulations. They have the full force of federal law, and buried in Section 9A2 of the Commodity Exchange Act, that's 7 USC 13A2 if you want to look it up, is a line that should terrify every bullion bank on Wall Street, and it says, quote, "It shall be a felony punishable by a fine of not more than $1 million or imprisonment for not more than 10 years, or both, for any person to manipulate or attempt to manipulate the price of any commodity in interstate commerce. 10 years in federal prison for manipulation." Now, the COMEX, where gold futures trade, operate under rules approved by the CFTC, and buried in Chapter 7 of the COMEX Rulebook, Section 714 is titled Failure to Deliver. It's another line that matters. Quote, "Unexcused failure to make delivery shall be deemed an act detrimental to the interest or welfare of the exchange." Translation, if you sell a gold contract, you're legally obligated to deliver the gold. The rules are specific. Section 703B requires depositors to release metal within 5 business days after a warrant is canceled for loadout. Section 702 states that if a clearing member fails to perform its delivery obligations, it may be deemed a default. These aren't suggestions, these are legally binding obligations enforced by a federal agency created by Congress. Now here's the problem. Right now, there's approximately 90 paper ounces of gold claims for every 1 physical ounce sitting in COMEX vaults. 90 to 1. That's 90 legally binding delivery obligations for every ounce of deliverable metal. On first notice day, March 31st, holders of April contracts can demand physical delivery. If too many of them stand for delivery at the same time, the exchange faces a choice: deliver gold they don't have, or change the rules. You've seen what they do. In 1968, they closed the market. In 1980, they banned buying. In 2020, they invented a new contract on the fly. Every time, they've chosen to change the rules rather than admit the vaults are empty. But here's the thing about federal law. You can change exchange rules overnight. You can't change the fact that someone was promised gold and didn't get it. Now, let me be clear with you. There's never been a time when every contract was demanded at the same time. And we don't know that they're nearly empty, but that doesn't mean people are seriously worried that, it could happen. Now, the vault trade, this is sign number one, forensic evidence I was talking about. My friends track the registered inventory at the COMEX daily. This is the gold that is actually available to be delivered to investors. For decades, this number was healthy, millions of ounces. According to market reports, registered gold fell from approximately 13.5 million ounces in March 2025 to around 10 million ounces by year-end, a 25% compression in deliverable supply, even as prices surged. For the first time in COMEX history, deliverable supply is shrinking while prices are surging to all-time highs. Every month in 2025 set a new delivery record. October alone saw 197 tons delivered, more than 5 times the historical average. Yet registered inventory fell 25% during a year when gold rose 65%. Demand is overwhelming supply at record prices. That has never happened before. It's a massive drop. And where is it going? East. Shanghai, Mumbai, Moscow. The eastern nations are draining Western vaults, exchanging depreciating treasury bonds for physical gold bars. COMEX registered inventory declined in 2024 and 25, and at the current price, deliverable supply continues to tighten, and when physical constraints meet paper obligations, the price mechanism breaks. Zero triggers the default, and that triggers the reset. Now, here's what most people miss. When the paper market breaks, it's not just gold that explodes. It's the miners that go parabolic. During the Great Depression, the Dow crashed 73%. Homestake mining gained 470%. Dome mines gained 558%. They were the only stocks going up while breadlines stretched around the block. This is the mechanism. In the 1970s, the Barron's Gold Mining Index returned 12%. S&P, 40%. Miners outperformed by 29 to 1. But it's the junior miners where fortunes get made overnight. In 1979 to 1980, Copper Lake went from 8 cents to 10.50. That's 13,000%. Silverado mines returned 3,900%. Eagle River, 3,400. The average junior miner in that cycle returned 2,300%. In 95-96, Cardaway went from a dime to $26. Every single one of those moves happened after a delivery crisis forced the paper market to reprice. We're watching that same setup right now. Vaults draining, delivery delays stretching to weeks, emergency airlifts moving gold across continents, and a hard deadline, March 31st, when the next wave of paper promises comes due. Which leads me to the second sign, a central bank panic. If you want to know what's going to happen to gold, don't watch what the central banks say, watch what they do. In public, Jerome Powell and the Fed say gold is not money. They say inflation's under control. They say the dollar is strong. But in private, central banks bought more gold last year than at any time since 1967. This isn't a trend. This is a panic. And in a moment, I'm going to show you the one stock positioned to capture the lion's share of this buying spree. A company, I believe, could hand us 1,000% gains as the panic accelerates. China's dumped over $100 billion in U.S. debt and bought gold. Poland, Hungary, Singapore, Turkey, they're all backing up the truck. Why now? What changed? The weaponization of the dollar. We have to look at the geopolitics here. This is the game theory part of the equation. When the U.S. froze Russia's reserves in 2022, we crossed a line. We told the world, your money's only safe if you do what we say. Do you think China liked that? Do you think Saudi Arabia liked that? Of course not. They realized they needed a new system, a system immune to U.S. sanctions. And there's only one asset that has no counterparty risk, gold. Now I have to stop here for a second because there is a name we haven't mentioned yet, Donald Trump. He's in the White House. He has promised to make America great again. He has promised to protect the dollar. In fact, he explicitly threatened the BRICS nations. He said, quote, "If you leave the dollar, you will face 100% tariffs." So, you might be thinking, doesn't a strong Trump presidency mean a strong dollar? And bad news for gold? It's the exact opposite. And this is the great irony of 2025. I believe Donald Trump will go down in history as the man who accidentally destroyed the paper gold market. He wants to save America. That is a very different thing from saving the strong dollar. Think about his policy. He wants to bring manufacturing back home. He wants us to export cars and steel, not just financial derivatives. To do that, you need a weaker dollar. You cannot export goods if your currency is too expensive. So, while he says he wants a strong dollar reserve status, his actions, tariffs, trade wars, lower rates, all push the dollar down. But here's the accelerator effect. When Trump threatened the BRICS with 100% tariffs if they stopped using the dollar, do you think they got scared and bought treasuries? No, they panicked. They realized that the dollar is no longer a currency, it's a weapon. If you're China or Brazil or India and you see that the US president is willing to use the currency to destroy your economy, you don't buy more dollars. You run for the exit. You buy gold. Trump's weaponization of the dollar has forced the rest of the world to accelerate their plan B. They're moving to a gold settlement system faster because they're terrified of Trump's tariffs. So, Trump is the ultimate catalyst. His America First policy is forcing the rest of the world to a gold first policy. He isn't stopping to reset. He's hitting the gas pedal. That brings us to sign number 3, the retail freeze. This is the one that hits Main Street. Have you tried to buy a gold coin lately? Try it. Go to a dealer. Try to buy a significant amount. Say, 50,000 worth of American Eagles. First, you'll be shocked by the premium. The spot price might be $2,600, but the dealer will charge you $28, $29. That gap's the cartel tax. It proves the spot price is fake, but worse, try getting delivery. I am aware of people at major mints, and they're saying that the delays are stretching into weeks. The supply chain's broken. And let me give you a real-world example. You might have heard that Costco started selling gold bars. Sounds crazy, right? Buying gold with your bulk toilet paper, but here's what's happening. Every time they list those bars on their website, they sell out in hours. Wells Fargo estimates they're selling $200 million a month. Why? Because regular people can't find metal anywhere else at a fair price. And I'm aware of major dealers that, there's premiums on American Eagles that are 30-40% over the spot price. And the spot price says one thing, but if you try to actually buy the metal, you're paying a massive surcharge. And that gap, 30-40% premium, is the real inflation. That's the market telling you that the paper price is fake. And when Costco runs out of gold faster than they run out of rotisserie chickens, you know the currency is in trouble. That is a functional default. If you can't get your money out of the bank in cash, the bank has failed. If you can't trade your dollars for gold, the currency has failed. When you have empty vaults, panic buying by central banks, and a retail shortage, you have the perfect storm for a 1,000% repricing event. Now, I've made a compelling case for gold, but there's something darker you need to understand. If the dollar is collapsing, why is the government just letting it happen? Because they aren't trying to save it. They're trying to replace it. The debt's $36 trillion. It's mathematically unpayable. They need the system to crash because out of the ashes, they plan to introduce central bank digital currencies, CBDCs. And a CBDC isn't money, it's a leash. It's programmable code. The government could set expiration dates on your savings. Spend it by Friday or lose it. They could restrict what you buy. No guns, no gold, no unapproved vendors. They could freeze your account with a single keystroke if you say the wrong thing online. This isn't science fiction. The infrastructure is already built. FedNow launched in 2023. They're just waiting for the crisis. Gold is the only asset that exists outside this digital control grid. It cannot be hacked. It cannot be deleted. It cannot be turned off by a bureaucrat in Washington. When you own physical gold, or when you own the shadow miner that controls the gold, you are opting out of their system. And once they flip the switch, once the dollar becomes the Fed coin, it will be too late to move your wealth. That's what makes this personal for me. This isn't just about charts and tickers. There is a human cost to all this. You've heard of the two Americas. This isn't an accident. It's a harvest. The system needs paper Americans. They need you to stay in cash so they can inflate away their debt. They need you to buy their overvalued ETFs so they can exit their positions. Every time you leave $1 in a savings account, you're effectively donating your labor to the people who broke the system. They sit in the Hamptons and laugh about inflation because inflation makes them rich. It makes their assets go up. It makes your grocery bill go up. It is a wealth transfer from you to them. Personally, I refuse to play that game, and I want to help 100 people opt out of the system today. It's more than a hedge. It's a declaration of independence. When you buy an ounce of gold or a share of the shadow miner, you are voting against the debt. You are voting against the inflation. You're taking your labor, your hard work, and you are locking it into a vehicle that the government cannot dilute. That is why I do this. I'm sick of seeing good, honest people get fleeced by Wall Street and Washington. I want to give you the tools to fight back. I want to help you cross the bridge from the paper America to the hard asset America. I want you to secure your legacy before the reset happens, because once the reset happens, the drawbridge goes up. The assets will be too expensive to buy. The opportunity will be gone. You have to move now. So how do you do it? How do you actually capture this opportunity? Most people will try to buy physical gold, and they should. I mean, you have to understand one thing though. Physical gold protects your wealth. It doesn't multiply it. If you want to turn a small stake into a fortune that can survive the coming reset, you need leverage. You need the asset that moves 10 times faster than the metal itself. That is why the shadow miner is so important. So if the physical metal is becoming impossible to buy, or the premiums are eating up all the profit, how do you invest? How do we capture this 1,000% upside? You own the source. You have to own the ground. When the world runs out of gold, the company that owns the gold still in the ground becomes the most valuable asset on the planet. There is a catch. You have to be extremely careful in this sector. Why? Because the truth is, mining is a terrible business. It's a nightmare. You have to dig giant holes. You have to fight labor unions. You have to burn millions of gallons of diesel fuel. When inflation goes up, the price of gold goes up, but the cost of mining eats all your profit. That is why I hate most miners. They're cash incinerators. But this company, the shadow miner, they don't dig holes. They don't buy diesel. They just own the gold. Think of it like a bank vault. Imagine finding a bank vault in the ground that holds 88 million ounces of gold. You don't have to build the bank. You don't have to hire the tellers. You just hold the deed to the vault. That is optionality. And right now, that deed is trading for pennies. The company I'm recommending today, the shadow miner, holds the combination of that vault. They own 100% of one of the largest, highest grade, underdeveloped gold copper systems in the world. So let's dig into the shadow miner. You might wonder about the scale. Think about the super pit in Australia. It's one of the most famous gold mines in history. It's a giant hole in the ground visible from space. It produced about 500,000 to 700,000 ounces a year for decades. It is a monster. But forget about mining for a second. Mining sounds risky. It sounds expensive. I want you to look at this company differently. Imagine they own a massive indestructible storage unit in a safe neighborhood. Inside that unit, they've stacked 88 million ounces of gold. They aren't trying to sell it today. They're just holding the key. Think of it this way. This company is sitting on 88 million ounces of gold resources. How big is that? That is more gold than the entire Federal Reserve of France holds in its vaults. It's more than Italy. It's more than China. You aren't just buying a mine. You're buying a deposit that is physically larger than the national savings of almost every G7 nation on Earth. But the stock market creates a glitch that values this company at a fraction of that. It's like walking into a bank, handing the teller a $10 bill, and having her slide a $2,600 gold coin back under the glass. You don't need to be a geologist to understand this trade. You just need to be a shopper. You're buying $2,600 worth of inventory for $10. Why? Because the market thinks the storage unit is, quote, locked by permits. But I'm telling you, the lock has been cut. The government recently granted them a rare designation called substantially started. In plain English, this means their key environmental approvals are no longer subject to the typical expiration timelines that kill most mining projects. This is one of the most durable permitting positions in the industry. Most mining companies spend decades fighting regulators, worrying their permits will run out before they pour the first bar. This company has cleared the single biggest regulatory hurdle in mining, the permitting risk that destroys most projects. Dramatically reduced. The asset has what few mining projects ever achieve: regulatory certainty. Of course, like any mining investment, there are still risks: commodity prices, capital requirements, execution timelines. But on the permitting front, this company has a level of security that is exceptionally rare. The inventory is now accessible, and the major miners are lining up with their trucks to buy the whole unit. It is the purest leverage on the market. If gold goes up 10%, the stock goes up 30 or 40%. If gold doubles, the stock could go up 1,000% or more. But there is another reason the majors are desperate for this specific company. It's not just how much gold they have, it's where it is. Look at the map. Russia, sanctioned. You can't do business there. China, the enemy. Africa, coups, warlords, and resource nationalism. South America, constant threat of nationalization. The world's becoming dangerous. If you're Newmont or Barrick, you can't build a 50-year mine in a war zone. You need safety. You need the rule of law. Our shadow miner, located in the safest mining jurisdiction on Earth, North America. It's in a region known as the Golden Triangle in British Columbia. This isn't just safe. The Canadian government is effectively partnering with them. They just spent billions of dollars building a new highway and a 287 kilovolt transmission line directly to the gate of this property. That isn't a utility pole, that's a 287,000 volt industrial artery capable of powering a city of 100,000 people. Governments don't build city-sized power grids in the middle of nowhere for a hiking trail. They built it because they need this copper and gold to come out of the ground. The red carpet is already rolled out. In a world of chaos, safety commands a massive premium. So I believe a buyout is imminent. I believe it's inevitable. But here's what the charts are telling me right now. If you look at the volume on this stock over the last 14 days, there's institutional accumulation happening. That's what we call the stealth phase. My institutional data feeds would say it's a code red alert. So we aren't just seeing random buying, we're seeing a coordinated raid. And I just tracked 13F filings on Newmont. The institutional accumulation is striking. Australian Super increased their position by 125% in a single quarter. Robeco boosted their stake by 170%. Knights of Columbus jumped 290%. Serious institutions moving in size simultaneously into the same beaten down gold major. Also, Copredict Global Investors, a deep value contrarian shop that's been trading Newmont's volatility aggressively for years, buying hard at $29 and $40, trimming at $60, and publicly calling gold miners one of the most mispriced assets on earth. Their chief investment advisor has been on podcast after podcast making the case gold's up 80% since 2011, the miners are down 75% from their peak. You can buy Newmont cheaper than the S&P and get a better dividend yield on top of it. The pattern is hard to ignore. While the rest of the market was chasing Nvidia, some of the most disciplined value investors on earth were quietly loading up on the world's largest gold producer. The 13F filings don't lie. These aren't day traders guessing. These are the biggest players in the sector loading the boat before the announcement. The window is closing, and if you don't act before the news hits the wire, you will be buying at retail prices instead of wholesale. Someone knows something. Maybe it's a major miner positioning for a hostile takeover. Maybe it's a sovereign wealth fund securing copper supply. I can't tell you exactly who is buying it, but I can tell you that the smart money is positioning before the announcement. They're trying to keep the price down while they fill their bags. But once that news hits the wire, once the headline says Newmont offers $3 billion for shadow miner, the stock will gap up 100-200% before the market opens. You cannot wait for the press release. You have to be in now. Historical proof? Well, this has happened before. Can I give you an example of what that looks like? Look at Great Bear Resources. They had a great discovery in Canada. Not as big as this one, but high grade. Wall Street ignored it for years. It traded for pennies. Then Kinross Gold came in and bought them for $1.4 billion. The stock jumped 100% overnight. All told, the stock soared 5,700%. Look at Pretium Resources. They had the Bruce Jack mine, Another Canadian success story, Newcrest Mining bought them for $2.8 billion. Again, huge premiums. From bottom to buyout, they surged 565%. Those are impressive numbers. But you might be thinking, 1,000% gains, that sounds too good to be true. Has this actually happened before in a setup like this? It hasn't just happened, it is the standard operating procedure of a gold supercycle. We have to look at history. We're entering into a cycle like the early 2000s. Gold was hated. Tech stocks were crashing. The Fed was printing. And look what happened to the companies that held the gold in the ground. The shadow miners of that era. They didn't mine, they just hoarded silver in the ground. Between 2001 and 2007, their stock went from 70 cents to $42. That's a 5,700% gain. That turns 10,000 to 570 grand. Look at Northern Dynasty. They held a massive undeveloped copper gold deposit, very similar to our shadow miner today. They went from 50 cents to nearly $20. That's a 3,900% gain. Northern Dynasty has not been without its permitting problems, but the gains were real. But the perfect example is Nova Gold. In 2001, they were in the exact same position our shadow miner is in today. They were sitting on a massive deposit called Donlin Creek. It was too big to ignore, but the market hated it because gold was cheap. The stock was trading for 27 cents, but when the repricing event started, the value of those ounces in the ground woke up. By 2007, Nova Gold hit $19 a share, from 27 cents to $19, a 7,000% gain. Nova Gold didn't discover a new continent. They didn't invent a new technology. They just sat on their deposit while the gold price reset. The market did all the work for them. That is the exact trade we're making today. So when I say 1,000%, I'm being conservative. Now, I want to be clear. Nova Gold did lose most of those gains since then, but there was a moment where the opportunity to cash out close to or even near the top was completely attainable to anyone paying attention, like we are right now. If our shadow miner achieves just half of what Nova Gold did in the last cycle, we're looking at a 35x return. History is the only lab we have, and the history of this asset class says it explodes when the dollar breaks. Now, you might be thinking, what if gold stalls here? What if $15,000 never happens? Fair question. Let me show you why the math still works. Even if I'm dead wrong about the price target, the shadow miner is sitting on 88 million ounces of gold equivalent resources. Now, I'm not saying these are proven and provable reserves, but if they are, at today's price of roughly $4,900 an ounce, that's $430 billion worth of metal in the ground. The company's market cap, around $1.5 billion. It's a 270 to 1 ratio of in-ground value to stock price. Even if gold never moves another dollar, even if it just sits here at $4,900 forever, you're still buying $430 billion of assets for $1.5 billion. And if gold goes to 6,000, that's 88 million ounces that becomes worth $500 billion. At 10,000, $880 billion. The margin of safety here is enormous. You're not betting on a moonshot. You're just buying a vault full of gold at a 99% discount and waiting for the market to notice. It's not speculation, it's arithmetic. So the question isn't whether this opportunity is real. The question is whether you'll act on it. I could charge $10,000 for this research. Hedge funds pay a lot more for this kind of intelligence, but I want the average guy to have a shot. I want the guy with $5,000 or $10,000 to be able to turn it into $50,000 or $100,000. That changes lives. That pays off mortgages. That sends kids to college. That's the power of the shadow miner. It is the slingshot that allows the little guy to catch up to the big guys. But you have to have the courage to pull the trigger. You have to be willing to act when others are sleeping. So, how can you get the name of this company? How can you join the hard asset class? I put everything into a brand new daily trade of the day analysis. It's called the Run of Gold, the one stock for the coming gold revolution that I talk about in the Trade of the Day webinar. And I give the full breakdown. I show you the ticker symbol of the day. I show you the buy up to price. I walk you through the reserve calculation so you can see the math for yourself. And I explain exactly why I believe the takeover announcement for this company could happen within the next 12 months. And I'm giving this ticker away to you today, but I have to be clear about something. This is a small cap stock. It's volatile. I cannot have millions of people piling into this all at once. It could lead to everyone shouting about the stock on social media and the stock starting to move well before any takeover announcement. And before the fundamentals truly hit. So I'm limiting this offer to the first 100 people who respond to this Bluetooth Live, and it's only 100. I want serious investors, people who understand the opportunity and are ready to act. So here is the invitation. I'm inviting you to join my flagship research service, Stocks Community. This is where I publish my best ideas. It's where I recommended MP Materials for a 61% gain. It's where I recommended Intel for a 71% gain last year. It's where we're currently sitting in gains on Micron at 46% and AXT up 160%. It's where I'll be guiding you through this gold cartel collapse. When you join today, you'll get instant access to the run on gold. But that's not all. I also have a second report here on my desk, the silver squeeze, the 5,000% opportunity in the Mexican junior miner poised to explode. Why silver? If gold's the main event, why distract us with silver? Because if gold is for your safety, silver is for your greed. You have to look at the ratio. Historically, 1 ounce of gold buys about 15 ounces of silver. That's the ratio in the Earth's crust. It's the ratio in history. Right now, 1 ounce of gold buys 85 ounces of silver. That's a 5 standard deviation anomaly. It's one of the most mispriced relationships in all of finance, but that's only half the story. The other half is industrial panic. Silver isn't just money. It's the most conductive metal on the periodic table. You cannot have a modern economy without it. You need it for solar panels. The new high-efficiency panels use 50% more silver than the old ones. You need it for electric vehicles. Every EV has up to 2 ounces of silver in the connections. You need it for AI chips, NVIDIA, AMD, TSMC. They all need silver for the highest end processors. And it's not just solar panels. It is national security. Silver's connectivity makes it essential in military electronics, guidance systems, communications equipment, and defense hardware all rely on silver contracts. The exact quantities used in weapon systems are classified, but with global defense budgets expanding and tensions rising, military demand for silver adds an often overlooked floor under the price. And right now, the U.S. National Defense Stockpile holds virtually zero silver. According to USGS data, the strategic reserve has been depleted since the 90s. If a war starts tomorrow, the Pentagon has to go into the open market and fight with Tesla and Apple to buy the metal. They're completely naked. That adds a war floor to the price that no other asset has. So what happens if a war starts? What happens if Trump ramps up defense spending? The Pentagon will have to buy silver at any price. They won't care if it's $50 or $100 or $500. They need the metal. This adds a war floor under the price of silver that nobody's talking about. Here's the math problem. The world mines about 800 million ounces of silver a year. Total demand consistently exceeds total supply. According to the World Silver Survey 2025, this has resulted in structural deficits for 5 consecutive years, with the 2024 deficit at 150 million ounces and 2025 forecast at approximately 120 million ounces. Cumulative deficit from 21 to 24 alone totals 670 million ounces, equivalent to nearly 10 months of global mine production. We're eating into the above-ground stockpiles. The warehouses in London and Shanghai are bleeding dry. We're heading for a mathematical wall. A moment where a major industrial user, maybe Tesla, maybe Samsung, calls a refinery and says, I need 10 million ounces. And the refinery says, we don't have it. When that happens, the price of silver doesn't go up 10%, it doubles, it triples. In 1980, silver went from $6 to $50 in a few weeks. In 2011, it went from $18 to $50. In this cycle, given the deficits, given the inflation, I believe silver will blow past 50 and head towards $100 or higher. I have a specific stock for this. It's a junior miner in Mexico. They're sitting on one of the highest grade silver veins discovered in the last decade, and I present this as well as the gold report in the Trade of the Day live stream. It's been suppressed, the stock's trading for pennies, and if silver moves to $50, this stock acts like a call option. It could go 5,000%, turning a $1,000 bill into a $50,000 windfall. That is the silver squeeze opportunity, and I'm giving you that idea for free today. So you get the shadow miner and the silver squeeze. What else? I'm also including the new gold standard, your survival guide. This is crucial because while we are chasing gains, we also need to protect what we have. When the dollar resets, when the cartel breaks, there will be chaos in the traditional banking system. This guide shows you how to firewall your wealth. It shows you which banks to avoid. It shows you how to legally move some of your wealth outside the US jurisdiction. It shows you how to store physical metal safely. It is your insurance policy for the coming storm. And finally, I'm giving all my new members access to my stocks community where the trade of the day and all the information from this report is received. This is a track portfolio of every recommendation I make. You'll see exactly what to buy, when to buy it, and when to sell. You'll get my YouTube transcript email updates every weekday, keeping you ahead of the news cycle. You'll get flash alerts whenever I see a sudden opportunity or threat. It's a complete system, and usually access to stocks community costs $65 a week. And considering I've helped readers double their money on trades, that's a bargain, but we're in a crisis. The reset's here. I want to help as many people as possible before the window closes. So for the folks listening to this, I want to make this a no-brainer decision. You won't pay $65. You won't even pay $45 when you're live or on this recording. For the first 100 people, I'm offering a founding member rate of just $25 for the first 7 days. $25, less than $4 a day. It's less than the cost of a decent cup of coffee. Think about that. For the price of a latte, you'll forget by tomorrow morning, you get a full week of institutional grade trade ideas that could secure your family's finances for a generation. And I bet it could be the best investment you make all year. And it gets better. I'm so confident in the shadow miner. I'm so sure that the gold reset is happening that I am offering a bold guarantee. Your questions answered. So before I give you this guarantee, I want to answer those questions. You likely have doubts swimming in your head right now. I know you're smart. You've seen gold bulls come and go. But before we go further, I imagine you have a few questions, a few very specific ones I want to answer right now. And the first one, probably, what if we get deflation? This is one of the common reactions I hear. If the economy crashes, if the stock market collapses, usually everything goes down. Cash becomes king. Why would gold go up if we have a depression? That is the biggest myth in finance. Look at the Great Depression, 1929 to 1934. The stock market fell 89%. Real estate collapsed. Wages collapsed. But what happened to gold stocks? Home stake mining, the biggest gold miner of the day, went up 470%. Dome mines went up 558%. Why? Because when the economy collapses, the government devalues the currency to try to stimulate it. In 1934, Roosevelt revalued gold from $20 to $35. He overrated a massive profit to gold holders. In a deflationary crash, gold isn't just a hedge, it's the only thing that goes up. Question 2, confiscation, another concern I hear a lot. If you studied American history, this is something that jumps to mind immediately. I just mentioned Roosevelt. In 1933, he confiscated the gold. He made it illegal for Americans to own bullion. If things get this bad, won't the government just seize our gold again? They might seize physical bullion. That's a real risk. But historically, they do not seize the mining stocks. In 1933, you had to turn in your gold coins, but if you owned shares of homestake mining, you kept them. And you got rich. Why? Because the government needs the miners. They need the metal coming out of the ground. They can tax the profits, sure, but they don't want to run the mines. They are incompetent. Owning the shadow miner is actually safer than owning physical gold in a confiscation scenario. It's a productive business, not just a rock. Question 3, liquidity. This is a sensible fear everyone has when they hear the small stock with big upside stories. The shadow miner sounds incredible, but is it a tiny penny stock? If 100 people try to buy it at once, will it move the market? Will we all get stuck? That's a critical question. I would never recommend a stock that you couldn't get in and out of easily. This isn't a pink sheet gamble. This company trades on the New York Stock Exchange. It has a market cap of over $1.5 billion. It trades millions of dollars worth of shares every single day. It's large enough for BlackRock and Van Eck to own. It's large enough for a major sovereign wealth fund to buy. So yes, it is liquid. You can buy it in your IRA, your 401k, or your brokerage account with a single click. But while it's liquid, it is scarce. It's not like we're moving the stock, but there are only so many shares. And once the buyout rumors hit the mainstream news, that liquidity will dry up for the buyers. You won't be able to get in. That is why you have to move now. One last question. Gold's already near all-time highs. Did we miss it? For these moments, I like to remind people the chart of the psychology of a bull market. Every bull market has 4 phases. Phase 1 is the stealth phase. Smart money buys, the insiders buy, the public is asleep. Phase 2 is the wall of worry. The price has a grinding higher emotion. People are skeptical it's a bubble. And then phase 3 is the taxi driver gives you stock tips. CNBC talks about gold 24/7. Everyone piles for. Phase 4 is the blow off, the bubble mania, and collapses. So where are we now? We're just leaving phase 1. The public isn't here yet. Your neighbor isn't buying gold yet. He's buying NVIDIA. And when the crowd arrives, and they will arrive, that is when you see the vertical moves. We're positioning ourselves ahead of the crowd. We are the welcoming committee, and we will sell our shares to them when the mania hits for a 10x, maybe even a 100x windfall. So let's recap. The cartel is broken, the vaults are draining, the central banks are panic buying. And I have identified the one shadow miner poised to target that 1,000% windfall. For just $25, you get 7 days of stocks community, the daily trade idea, and weekday newsletter. You get the run on gold. This is our investing Bible. It contains the ticker symbol for the shadow miner, and that gets live streamed in the Discord. And you get the buy up to price, the price where you don't overpay. The silver squeeze, the 5,000% opportunity. I reveal the small Mexican junior miner sitting on the high grade veins that could act as a call option on the entire silver market, also in the 15-minute live stream. The new gold standard, your wealth fortress, how to fireproof your money, store metal privately, and legally opt out of the CBDC control grid. The ironclad satisfaction guarantee. So here it is. Here's my prompt. I want you to review the research I give you with absolute confidence. So take the 7 days to review everything on my YouTube. Join the live stream on YouTube when you see me going live like this. Watch the recording, track the daily videos, watch the free training over at stockscommunity.com. And if you don't believe all this is the most valuable free financial intelligence you've ever received, or if you're not completely satisfied for any reason with what you get for free, simply let me know. I'll take your ideas in stride in my very next YouTube video and live that I put out. The customer's always right, no matter what, but right now the clock is ticking and I'm putting my labor on the line. I've been in the prediction of markets for a decade now. Reputation is everything. And I wouldn't be standing here telling you that the cartel is dead, telling you to buy the specific stock if the data didn't support a massive repricing event. The signals are here. The precedents are here. Now it's up to you to take the shot. But look at the clock and look at the market. Gold is moving. The insiders are positioning. The clock started ticking on September 14th. The vaults are draining. The physics of the market have taken over. You have a brief window, maybe weeks, maybe only days before the repricing event becomes public knowledge. If you wait, if you hesitate, you will miss the entry price. The shadow miner is trading for pennies today. It could be trading for dollars next week. March 31st is first notice day. That's when the next wave of paper promises comes due. That's when holders of April contracts can walk up to the window and demand their gold. And the vaults are draining faster right now than they were before 1968, before 1980, before 2020. Every single time, the people who positioned themselves before the delivery crisis made fortunes. Every single time, the people who waited bought at the top or couldn't buy at all. Look at the calendar. We're in the final countdown. There's a link at the bottom of this video. Click it. It will take you to a secure page where you can review everything I've discussed. You can see the details of the 7-day trial. You can see the free training on that page, and you can secure one of the 100 spots. But don't wait. This whole offer is being shared with thousands of people. Those 100 spots will go fast. So don't be the person who looks back in 2027 and says, I knew I should have bought gold. Be the person who acted. Be the person who secured their family's future. March 31st is coming fast. Click the link below now.